Happy Friday and welcome to the Stock Market Neophites. We have another action-packed show for you this time. Hey, hold on though. We are streaming at the most platforms we've ever streamed on. I'm actually putting this on my mouthwash one and some other stuff so you can get an idea, because we need
You're making me nervous, John.
Making you nervous? I know. We need more followers to get our thing going. So Facebook's finally let us, go live, and we got all this stuff set up. I was trying to do Instagram.
What name you got on there, John?
How'd I get? Oh, I got the wrong name again. How'd I do that, Gary? They're gonna figure out who I am at some point.
I don't know who that guy is.
Yeah, it's like, I don't know. I wouldn't listen to his advice ever. So, and I wouldn't listen to the other guy either.
He's definitely a neophyte.
I had it right on the other thing, but when I switched, we'll be good.
It's good to see you, Johnny. Johnny the Bull, buddy.
It's good to be seen. It's been an interesting week on the market.
It has.
We got another exciting guest coming on today. This is going to be good. And you probably noticed behind me here, I got the eclipse there. So if you're watching from Florida, you guys don't have any eclipse night stuff going on, but the eclipse is coming right through Indianapolis. We're supposed to have chaos. Go get the bread and milk. It's going to be unbelievable.
Should I put my sunglasses on?
Yeah, you might want to make sure they're approved, because if you don't put the right ones on, you go blind, and we won't be able to do any market trading. You'll have to do it all by feel. I think it's going up.
My Trump stock just came back.
Okay, good.
So anyway, it's been a heck of a week, hasn't it?
Yes, it has.
We had a lot of news. We had the jobs report this morning, and the stock market, it sold off heavy, Matt, yesterday.
Yes, it was not,
because I think they knew what was going to happen today.
Yeah, they know before we know. We just talk about what they do, right? Is that what this was mostly about? But hey, let's get to our guest. We'll do some cleanup here.
Excited.
I'm a little bit embarrassed to even talk about my how I'm doing in the $1,000 challenge, because I actually came back pretty good. On it. I was up above 900. I was like 935, 9. I was like really doing good. And then Mark Ford sort of went south. And I don't know. I'm going to look it up here real quick before we get to our guest on this thing, because it was, let's see. Oh, I don't even want to tell you. It's $7.99. So I'm really, really cranking it up on the $1,000 challenge. I'm going to change it to a $500 challenge. Can I do that? Then I'm up. So I don't know if this is the $1,000 challenge was a good idea. Fortunately, I did better in my other stuff this week. So let's go ahead. I'm going to introduce our next guest, because this next guest is near and dear to your heart. I have known him for 30 years. And he's a millennial. He's going to probably come on here and tell us what we're doing wrong as this old baby boomers, and all that. But this is Gary's son. This is Gary Jr. sort of. Yeah, Gary the second. And this kid here, he's a boy genius. He was number one in his class at Greenwood High School. Number one, not two, not three, not 500 out of 526 as I was. And I know the old man was not up in the top 10. So
no, he didn't get. He got his mom's brain.
Okay, well, but hey, his mom's not on a stock show like you are. So hey,
she's smart.
Brains do not equal stardom, right? And also, he went on to Purdue. He's going to be a doctor, but he started getting into finance and all that. And he's a numbers guy. I'm a creative guy. He's a numbers guy. He's married, got a kid. He's out there, taking over the world. He got great offers out of school. He's what do you call that? A poster child for, in a good way, as a son. Would you agree, Gary?
You're
awesome.
biased.
You're biased. Don't even say anything.
He's the best son ever.
Well, what about
best son ever?
The best. Let's put it this way: the best son that's going to be on this show today. Yeah, Yeah. Oh, yeah. He's living the dream. So let's bring
Yeah.
him on. Let's bring him on. So Gary, look, I told you not to turn red when
Yeah,
I was
it was
doing that introduction. So
a very flattering introduction. So I
yeah,
appreciate it.
you deserve it. I tell you, I got enough bad kids to know the difference between good and bad kids. So there you go. But
No, you don't.
yeah, I
You got
know.
great kids, man.
I don't know if they could tell me anything about the stock market. Although my one daughter just gave me a large amount of money to invest for her, and I'm like, that's pretty good when your kid's giving you money. That's a good sign. Means I might get a good nursing home someday.
You better hang on to it.
So Gary, I told the long version of how you're doing, Gary J. We'll call you Gary J. Give our viewers a little bit of background about you.
Yeah, we'll do. So first of all, thanks for having me on the show. Really excited to join today. And again, thanks for the flattering introduction. So I so like you had said, I went to Purdue and ended up getting into finance. My dad got me interested in the financial markets and started taking an interest, and I decided to pivot to a finance career, and so got my MBA. Went on, got hired at a Fortune 500 company in a finance role, and have been in finance positions for that company, and gone through spinoffs and acquisitions and mergers, and through that process also worked on getting some other finance related certifications. So I definitely I love finance and love the markets and constantly following them and trading and doing other things. And some of those other things, I think around 7 or 8 years ago, I started well trail trading, and well trail trading offers what's called a well trail indicator. It works on the NinjaTrader trading platform, and the idea behind it is it isolates, it sifts through all of the trade and tick data and isolates what those large whales are actually doing in the market, because usually we're only seeing these individual trades, which a lot of small trades could make up what on from one side could actually be a larger trade that a whale is making, and that's what I felt like was the true signal and what was important to trading. So got into
so you know what direction it's going.
If you send me in the private chat when we get going here, send me and I'll put it up on the because if any of our viewers want to, we got the chat going here on Facebook, and I don't think Twitter you can, but YouTube and some other areas you can put a question in there if you have a question for us, and I'll put your link in there, and maybe we'll get you some. Now, is this something that a person can buy a subscription to, or how does it work?
Yeah, that's exactly right. So if you go to the site, you can get a free trial. Right now, it's a 1-month free trial. And then you can either do a monthly subscription or even buy a lifetime license, which is very similar to how the NinjaTrader platform behaves.
Okay, so if I just do the free thing and I make so much money in 1 month, I don't need it anymore, right? So is that how it works? Is that like, well, Elon Musk is doing a guarantee now that if you buy this algorithm or this AI thing, that you'll make $1 million in a month. How's he that can't be right.
Doesn't
it seems like it's really.
Where'd you see that at?
I saw on like the TikTok or Twitter or somewhere. He's got, it's on the internet. It's got to be true. That's all I'm saying.
Yeah, right. There's no way it's AI made up or anything.
Yeah, it's like, no, that AI it sounds like almost incorrect. Sometimes it's that.
Well, speaking of Musk, hey, just today his stock went down. Tesla went down. Gary, did you see that?
No, I did not watch Tesla today.
Yeah, it was trading up at a little bit above 170, and it went all the way down to 160.51. And then Musk came out and tweeted that somebody was lying about his cheap EV cars, and it whoops, I'm hitting the wrong buttons, and it went all the way back up to 168.
Wow. Well,
quick.
It's funny. I think they sold more electric vehicles than they did anything else, didn't they? As far as, because I saw something about the auto show or whatever. They didn't invite Tesla, but they had sold more cars than any of the other car dealers that were there or whatever. So
Well,
I
they
don't know.
did, but sales are still down.
I'll tell you that electric car. Gary, Gary J? Do you have a electric car?
No, I don't.
Gary, you have an electric car? No, you got a diesel truck.
I have a diesel.
Yeah, it doesn't sound like a diesel though. I have a Ford. I have a plug-in hybrid. So you plug it in and you can get like 30 miles of electric. So if you're in the city and stuff, and then when you run out of your electric, it just goes to the gas hybrid. So it's pretty cool. But I'm not, my point being, who wants to sit there and charge your car? I see these people sitting charging their car. I mean, if you got, if you're in finance or market, you could sit there and work while you're getting charged. But to me, that seems like a pain. I mean, I want to go, I don't even want to fill my tank up of gas. It takes too long. 5 minutes. It's too long. Sit there for 2 hours. And it does take.
I've always wanted to know the comparison between the electric bill, because you have to put a charging station in your house.
Yeah. Well, I have a separate meter. I have a separate meter that charges less for charging, but if you do it during peak times, it's the same amount. It's only if you're charging overnight that it's 2 cents or whatever. So I think this is a Ponzi scheme, this electric car thing. It's like they're building a pyramid of electric cars, and then it's going to fall over.
What's interesting, I lived in Taipei, Taiwan for a couple of years for work. And over there, there's mopeds everywhere. And the big thing they have there are electric mopeds. And people will pull up in their electric moped to a station. And what they do is they remove the battery from the moped, stick it into the charging station, and then they grab an already charged one, stick it in. I mean, it takes 30 seconds.
There you go.
That would actually probably, it could,
well,
the batteries are probably too heavy for a car, but
yeah, you don't know this, but I don't know if you knew this, but I live in Mars Hill. It's an underserved area, and we have people that scrap things. So they would be taking the batteries to the scrapyard. That's how that would be for their meth. I'm just saying that probably wouldn't work here, but it's a nice try.
You could buy it back the next day, couldn't you, or something?
Oh yeah, you definitely could. I mean, probably for like $3 or a rock of crack or something. I don't know. It's
all right. Okay,
that's enough of that. But anyway, what other news do we have to talk about? Or Gary, what now? Do you deal with market finance stuff, or when you talk about finance? That's a broad.
The first thing that I want to ask Gary is your take on gold.
Oh yeah, you need to know that he's not doing that good on gold right now.
I've only lost almost 1,500 this week on gold because I shorted it.
Whoops!
And now I've shorted it again. So
yeah,
how high do you think it's really going to go? Man, I know it's the safe haven, but what does that mean? What's your take on it?
My take on gold generally is that it doesn't, there's no cash flows from it. When you buy gold, you're usually going to get hit with a big cut versus the spot price today. And then when you go to sell it, you're going to also get a haircut on selling it. So as far as a hedge on inflation, I've looked at, decades, centuries of data for gold and gold price. And it just doesn't actually behave as a good inflation hedge. So
are you're talking about the public out buying it from a middleman or something, or
right? Yeah, like actually buying. Like I just saw Costco. They started selling gold bars at Costco last year, and they had something over 100 million. And it's a very popular product, and I guess it's hard to get. As soon as they have any supply, it's bought up immediately. So it's popular, and but I feel like equities are a good inflation hedge, relative to gold. So I'm not big on gold, but I think because of what the market, the government's got a very expansionary program in place right now. The market, the Fed is trying to be contractionary, but we're not seeing much impact from that. So I think that's probably why we're seeing the price action from gold over the last couple weeks.
So what, I
take
mean,
off.
a couple,
I'm talking about the future market.
Futures, yeah.
Yeah.
Because it's been going up. I mean, now it reached
It
like an
hit
all-time high
23.49.10 today.
today.
Yeah.
Yeah.
that's
That's
like,
the highest.
you can't eat gold either. Well, I mean, you can, but it's probably not.
Is it still up today?
Yeah.
Yeah.
It's up $34 and trading at 23.43.10.
Okay.
Hit
Yeah.
23.49.
Crazy.
So I noticed once the Fed started kind of with that last FOMC meeting, they kind of confirmed that they were going to have some rate cuts. That's when I started to notice gold taking off. And I almost think that's a sign of people thinking it's too early to start cutting rates.
Because we're going to have inflation.
Yeah, because we haven't gotten inflation totally under control. So maybe that is what is.
I think that, being in finance, my opinion is that we kept rates, after 2008, it seemed like they just kept rates low forever. And they never, I'm thinking around 2018, 2019, and they should have been rates slowing it down, because I'm in construction. Your dad sort of retired from that. And it just seemed like it was just going crazy. We couldn't keep up with the work, with anything. So to me, naturally, slowing some stuff down that'd have been a good idea. But then COVID came along, and that was a slower downer right there. That slowed some stuff down.
Yeah.
What's your opinion on I guess let's talk about the Fed a little bit. We have Lucy Brent, she's a libertarian on my other show, and she wants to end the Fed. It's like, okay, what are we going to do if we end the Fed? But that's her, and taxation is theft. That's her two things.
Yeah.
So as far as controlling the finance, I mean, that's basically they're the people who have the strings.
Yeah.
What's your thoughts on that?
So what my thoughts are that what the Fed did during COVID, where they decreased interest rates to basically 0%, in the M2, the money supply, like more than doubled and added trillions and trillions of dollars. And a lot of people point to that and say that's what caused the inflation. That's one factor, but the big thing that's missing from that is what's called the velocity of money. So because of COVID and the restrictions and shutting down, businesses, restaurants, stuff like that, money velocity, how fast money is changing hands, that slowed down. And if you cut the velocity of money, the number, the frequency of transactions in half, and you double the money supply, you should, from an economic theory perspective or standpoint, whatever, you should not have inflation. But what I think happened was the Fed was not expecting the continuous stimulus, not the stimulus checks, but all of the other types of stimulus that came from the government. So the fiscal stimulus was much more than what the Fed anticipated. And I think Jerome Powell, even in one of his FOMC meetings, I think in early 2022, said we drastically underestimated the amount of stimulus and continued stimulus, the rent, the eviction moratoriums, mortgage forbearance, student loan forbearance, all of that was a stimulus.
Yeah.
And added discretionary cash flow to people's, lives. So all across the country. So I think that was the biggest impact, because I do agree with what the Fed did initially. I think they should not have kept rates as low as they did for as long as they did.
Yeah, it just seemed like, I mean, back in my day, youngster, we had rates of 13% to buy. I remember I bought a FHA house in 1987. I bought the rate down to 9.5, and I was doing cartwheels in the parking lot.
Right. Yeah.
And I took a loan from 1966 that was 6 3/4 on a condo I bought back then too. And I thought, that's great. Now it's like, I just look at that, I'm thinking, I know people that got a 2% mortgage rate, and they're sort of locked in their house because they can't move, because you get 8, whatever it is now. And do you think
they can't appreciate the value that's what went up?
No, it's because, inflation's eaten. It's basically inflated, money.
Right.
Do you think that's what, I think that you hear about Reagan had trickle down economics and Biden had trickle up economics. But in the long run, it's like old John Wayne said. He said, "Hey, Pilgrim, you put 20 men in a room and give them each $5 and come back in 10 years, and one of the SOBs will have all the money." I think that's why the market is up to almost 40K. We started with at 30, then they give all this money. Where do you think it's going to go? It's going to go back to the people, the rich people, and the poor people, they don't have it. So is that theory something that you could maybe tell me I'm wrong, probably right, or whatever?
I think, so many companies last year had the best record profits, absolute profits, like, dollars profits.
I did best ever.
And also the best margin. So they, as a percentage of the revenue, their profits were at all-time high. So they were increasing price more than the cost was increasing. And usually competitive forces in the market would almost prevent something like that. But then, they were saying, well, there's too much money floating around. Well, let's raise the price. And if we don't get any pushback, they're setting the price at what the market can bear, and they're continuing with it. So I think there will probably be a point where we turn and we start to have businesses do start to compete more and
turn and burn.
Well, and I think let's talk about labor for a second here. The labor, there's a shortage in everything except politicians, obviously, but doctors, nurses, pretty much everything. And I tell people the 2 A's if you're looking for a job: attendance and attitude. You can show up and you got a good attitude, you can get a job anywhere. Again, back in our day, we grew up with the Ronald Reagan, the Jimmy Carter recession. And man, it was, unless you knew somebody, you couldn't get a job. Now people are begging for people to come work, giving signing bonuses, whatever. You can make $18 at McDonald's. Come on. So how do you think that factors? I know, like, your dad's going to go get a job selling McChicken sandwiches at the McDonald's now. How much factor do you think that has in what is driving things? Because, obviously the competition in the masonry and the contracting right now is nil. It's nil. And I've been 35 years doing this. I've never seen it where I can name my price.
Right.
So, but you got to find workers. And I think there's a correlation between the labor force and being able to get the work done. Because I don't get paid unless I get the work done. I got to have workers to get the work done. I got to have good workers, or we're not.
Well, John, here's the secret to that. Any of your kids doing what you do for a living?
No, but I do have one that's, he's cuts down trees and stuff. So he's actually more of a blue collar
labor. But
yeah,
all the great contractors that I worked with, including yourself, and I think you'll agree with this, weren't necessarily teaching their kids the trade like our parents taught us the trade. We were teaching them, we're trying to encourage them to be doctors or
finance guys. Well, he tried the doctor thing, and he looks like a doctor too, a little bit. He could sell as a doctor, but pretty.
Yeah, I went out visiting, cut my arm. He put a Band-Aid on me. He was really.
And you didn't die. Well, there you go.
Bedside manner, right?
Yeah. Very nice.
So back to the question: how much do you think that the labor market being sort of screwed up has to do with any of this stuff with the economy?
Yeah, I think. And I think I just saw California's minimum wage just went up to $20, or at least was being proposed. So I think that business.
You lived in California for a while, right?
I did.
Yeah.
And I saw
right by Tom Cruise's movie house.
Top Gun. Yeah. Right there in Oceanside.
You should let him. He should let you take his private jet out and fly it around a little bit. I'm sure he's got one that he flies.
I called him up. He said he was shooting. He was too busy shooting for Top Gun 3, so unfortunately didn't work out.
Yeah. So what part of California were you in?
Southern California, so just north of San Diego.
Ladera
just south
Ranch?
Of, do what?
Ladera Ranch?
No. Right, just south of the military base.
Oh, Pendleton.
Yeah, Camp Pendleton, right?
So yeah, that's not quite San Diego. When I was out there, we rode from L.A. down to Camp Pendleton and back. It was like a 90-mile bike ride, and I was wanting to come back, and I thought, I'll go by the coast. It's got to be flat. I get to Dana Point, and it's
Ooh.
like straight up. You know where I'm talking
Oh,
about?
yeah,
That that was after 90 miles. I had to go up that. I was like,
Yeah.
that wasn't a good idea. It was fun though.
No,
But anyway, I digress with
there's
that.
no
But, yeah,
flat spots out there.
California's a beautiful place until you add people.
Yeah.
Because it's fairly expensive to
Mhm.
live there, and
Yeah.
the weather's awesome though. I mean, you just gotta, this when you get into Central Florida, you have to worry about the sea fog coming in. And all that.
Yeah. Oh, yeah,
There's some
right.
different stuff.
Marine layer.
But anyway,
So, Gary, are you saying with what you're saying? I mean, how does it pertain to the record highs that we're having in
Yeah.
the stock market? And is that a fair question to ask? I mean, everybody's wondering when we're going to get a correction.
Mhm.
I've been saying, you and I've talked about it. We thought we've hit the top. I want to say several times, at least a couple times. We thought, how can it go any higher? But it obviously is.
Yeah.
So,
I think what's been driving it since the stock market up since what it was October, November, with the when the FOMC finally pivoted to a more dovish outlook, starting to discuss, I think we're reaching the rate, or the inflation's coming down, more stable. We think we're on path. We'll probably be cutting. At the beginning of the year, the futures markets were pricing in 7 rate cuts for this year. Then the last FOMC, maybe the one before that, it started to say, okay, maybe not 7, maybe it's going to be 5. And then now, yesterday it was 3. I think earlier it was still 3, but now they're talking about it might only be 2, maybe only 1.
yeah, might not be any.
And now that makes, and there's always somebody that knows more than the average person about what's actually going to happen. And you mentioned your the whale trail, whale trail. There's actually another one that you can follow, Nancy Pelosi. And it's like, just do what they do. It's like I had a bricklayer that used to tell me, he says, well, I'm going to have a seminar on how to get rich, and it's going to, poor people are going to come, and I'm going to tell them, just do what rich people do. That was his whole seminar was, just do what rich people do. Okay. It's about, so hopefully I'm going to try this whale trail trading. I'm going to get my free subscription and see if I could lose some more money. I know Gary told you about our $1,000 challenge, which I've managed to get down to $800 now. It's I was all the way up like Tuesday. I'm like, oh good, I'm only going to be like $70 down on by the time the show. Yeah. It's like the weather in Indiana. Just stick around; it'll change.
Right.
So, but you're not in the path of the eclipse, are you, Gary? You're farther. You're west.
Yeah, we're further west. I think we'll get maybe like 30. I was seeing we'll see like a 30% coverage or something like that instead of 100%. From Texas up to Ohio, I think. But
it's Armageddon here. It's going right over my house. I mean, we're gonna. It's like
cool.
all these. The Motor Speedway is opening up. It's all these people come to see this thing. It's like, it's crazy. They've shut down the schools. There's bread and milk's all gone. It's craziness.
You guys see that there was an earthquake in New Jersey?
Yeah, I was just about to talk.
When?
4.8.
About an hour ago.
Really? Well, let's talk a little scripture here. It talks about this particular eclipse is going across 9 towns called Nineveh, and then the other eclipse we had went across some others that make and the very middle was Rapture, Indiana is the very middle of where they crossed. I'm just, I'm not trying to start any conspiracies or anything, but so you can see people get a little crazy about stuff like this. And I don't know how obviously there's people that are astrologists, they predict all these things happening, but so Monday is going to be fun here. I guess we have 4 minutes of total darkness. So
nice.
I was like, I'd be, I'll go out and rob my neighbors or something during that. And see, just read the bottom. There's entertainment for purposes. I'm not really going to rob more than 2 or 3 of the neighbors, not all of them. So, but all right. So in your business, Gary, do you invest that way? Or are you just looking for finance deals, or how does like I said, what is your finance. What's that mean? When I say I'm in finance, what would be a day with Gary? What would be a day?
I mean, for my job with my company.
Yeah.
So I am a business controller. So kind of like the financial and economic business partner to a business, covers the whole western half of the United States. We put in large assets that generate gases, and we sell those gases to almost every industry. Um, so it's so I help make sure that we're making the right financial decisions around investments, look at current performance, what we're forecasting, help the business figure out how to increase profits or improve efficiencies or whatever. So that's kind of generally what I do.
Well, me and your dad have a gas business going. We go to Taco Bell, and then we sort of worked it out how that works, but we're not got a lot of profit in it. But so
It kind of stinks, really.
yeah, it is. It's we got to put the smell in there so people know it's coming. That's just like they do in gas. Gas has no smell. Your gas that comes to your house, they actually have to put that scent in there so you can tell if it's leaking. Otherwise, it's odorless. So you learn a lot of stuff on this show. A lot. Now, do you guys do you do anything with that stuff? You know what I'm talking about on that, as far as that odor stuff that they put in there to make it smell gas. It's like, I should have been the guy that invented that. So when you have, like, your company has, let's talk about the investment of money that you have laying around. I don't know if you have, I got money laying around because I had such a good year last year. So is that part of your job description, as far as investing that in the highest yield of whatever you can get, that you won't lose it, or what's that look like? Or is that something you do?
So for my company, we have a treasury department that will handle that, like basically make sure we're optimizing where we have cash, making sure. I mean, we're a multinational global company, so we got to make sure we have cash in the right places based on current operations, upcoming investments. Money's moving all over the world, and so there's different opportunities, whether it's commercial paper or even getting short-term treasury bills, stuff like that, to make sure we're at least getting a return on the cash that's laying around.
And so that's sort of your job, is to make sure you have enough liquid to cover the to cover the spread and all that. Yeah, good luck with that. I have a hard enough time keeping 7 people under control. So it sounds like you got 70,000 people or something like that you have to deal with. That's a heck of a payroll. So let's see. Gary, you got any questions? Any other questions?
I do. Gary, let's talk about the stock market here a little bit.
This is a stock market show.
Yeah. Any of the stocks that we've talked about, like Save, you in Save anymore, or iRobot? Anything looking interesting?
Yeah.
Again,
so
we're not recommending any of these.
Yeah,
we're just talking about what we do.
Great question. So so for the past couple years, since the Fed cut or started hiking rates, what I've seen happen is the valuations of smaller companies, what they internally think their valuation is higher than what potential acquiring companies think their valuation is. And so I've been getting into it's called risk arbitrage, or M&A arbitrage, with a lot of there might be a company like Merck, pharmaceutical. They've been making a lot of acquisitions lately, and with these acquisitions, what you would see maybe 5-6 years ago mostly be a cash acquisition. The target company getting acquired agreed to a certain cash price per share. The acquirer agreed to that price, and it goes through. But with the discrepancy between what these companies are thinking valuations are at, what I've been finding are, not only will the spread between the current trading price and what the final transaction or deal price is, that spread can be good, but they have what are called these contingent value rights, these CVRs, and they're basically saying, we don't, yeah, sure, we'll sell today at $10 per share to you, the acquirer, but we think we're actually worth $20 per share, and you don't think that, but we come to this agreement that if we hit these certain milestones for like a new drug that's currently in development, if it gets FDA approval, or if we sell this asset or do this, then we hit it by X date in the future, you're going to pay us that $10 per share. So these CVRs, if you like, say you buy that stock, buy it for $9, 50 cents, it closes at $10. When it closes, you get that $10 from the deal, and then you get these CVRs. All right. And these CVRs will sit in your brokerage account. And if the target company that got acquired actually did hit that milestone, that gets paid out to you. So there's been a lot of these cash acquisition deals lately over the past 2 years where these types of things have been offered. And some have had, you'll make a return on, when you enter the trade versus when the deal closes. And then when if the company hits their milestone and whatever it was, that can be a huge return. Like a example was this pharmaceutical company did exactly that. They got acquired last April. They hit their milestone by December of last year, got FDA approval on something. And I ended up getting a 20x return on that investment. So it's pretty, yeah. So it's like you get an okay investment if it works out, or if the deal closes, and then you still have huge upside. Now, I don't think that'll happen with every single one, but it's just an interesting thing that's been.
Is that sort of a creative way to finance a deal? Sort of,
Yes,
to say, hey, look at, we're getting this done. And so, let's piggyback that onto earnings. How accurate, or how, you see these, a company always wants to paint the rosiest picture for their people. How, and I try to look at earnings and see, oh, they're saying it's going to be a 7-cent earning, and then it comes out and they actually made 10 cents and they missed it. And then that usually will send a stock up. How much faith you put in, say, what's publicly out there? I mean,
yeah.
So I just have a question about that.
That's a good question. So I think generally most the public U.S. companies accounting, they use U.S. GAAP accounting. They've got auditors. I think generally most companies are accurate with their accounting. Now, they do take liberties on some things here and there. And usually what the biggest difference is, you'll hear like non-GAAP earnings or adjusted earnings. And those are useful because they tell the investor, here's what our EPS was 7 cents, but there was 3 cents of things that we don't expect to be recurring and ongoing. And so that's why we think, we're telling you our adjusted or non-GAAP earnings is actually 10 cents, because then they want you to know like that 3 cents is something they think will continue. And it was just a one-time event. But the thing is, you got to watch out for, if companies are always doing that, it's like, every quarter, it's been 7 cents every quarter for the last, 4 or 5 years, but they've been saying adjusted's 10 cents. You'd say, okay, well, I don't trust your
when is it going to be 10 cents? I never see it.
Exactly.
Gold mine stock I got 4 cents a share, and it's been 4 cents forever. I didn't look at the earnings or whatever, but so about dividend stocks, how important is it to, look at a dividend? I mean, some people, a lot of these stocks have no dividends or they lose money, but they still trade. You can still make money off the trades. What's your feelings about, is this something that, hey, I always go for a dividend, or I don't really consider that? What's your strategy there?
So from a financial theory perspective, like whether a stock has dividends or doesn't, usually your total return would be the same. So if you have a 8% price appreciation, and a 2% dividend, you get a 10% total return. If they didn't pay out a dividend, it's likely their price appreciation would have been 10%. So
I see.
total return would have been the same. But the other thing that there is a tax difference between dividends and earnings from a company and capital gains. So some investors will consider, if there's a tax difference between getting dividends versus capital gains, they might prefer one or the other depending on their situation. So
Oh yeah,
I think it is. And then also some, if you just like a home, you don't usually have cash flow coming from your home. It might appreciate, but you don't have that cash flow. Just like that, some stocks that don't pay dividends, it's like, well, I do need some income, and dividends could be a part of that. But you could have what's called a homemade dividend, which is where if you need the income, just sell a couple shares to hit whatever.
Oh, I see what you're saying. Just sell.
Well,
you haven't been to my house. We got mattresses full of money here, so my house is like spewing. No,
it's like
everybody watching, I got no money here. I don't even have any change anymore because everything's by their credit card now. So
you don't even have any mattresses, do you?
No, we just sleep on straw on the floor, like the manger. It's terrible.
Yeah,
it's tough. All my money's in the market. That's what. So let's, Gary, we're getting a little long in the tooth there because we try to keep it to 45. You got one more question, comment, or whatever.
Oh, dear man, Gary, we appreciate you having on. We could talk to you all day.
I know.
Interesting stuff. I wish you had a crystal ball where you could tell us when the market's going to correct.
I wish I
got the magic eight. Here, let's ask the magic eight ball. Let's see. Will the market correct in a month or over a month? Let's put it this way. Will the market correct in 1 month? Because we got earnings coming out on May something or others coming up. So let's see.
Well, correction is healthy. Right, Gary?
Don't count on it. Don't count on it. Going down. I'm talking about going down, like dropping out. So don't count on it. I'm thinking presidential election. What do you think? I think that might be because it's presidential year. Usually everything keeps rolling. They'll do whatever they can. They'll start a war.
Does it wait for the election, or does it do it a couple months in advance?
They're
not going to do it when you think it's going to happen. So,
yeah, that's right. It's like a Shanghai. It's all that. So what do you think, Gary?
I think I would imagine that if Trump gets elected, I would think the market might go down a little bit. I think businesses will improve and profits will improve. I think overall and the overall health of the economy will improve. Right. But I think the markets might go down a little bit.
So you think some people will take some money out of the market to start, ramp up their business some more, or is that really where the money is right now? It's not people that are waiting for an opportunity in business or something else. I mean, where else would you put your money is what I guess I'm saying.
Right.
It's like, obviously Gary doesn't put it in gold's not the answer. So well, actually put it in gold's the answer.
Trump was in last time you put your money in real estate, and everybody was, and if they held on to it, it's just that rates and a lot of the other things are,
yeah, I would think that would be
good for that right now because they've raised them and everything. So people, the only way they're going to fill their profit or their equity in their home is to have a real good exit plan, because they're going to be buying something probably smaller and older than where they're at, right?
Yeah, it's like the rents are going up, so a lot of companies are buying houses here, raising the rents. We have like terrible eviction stuff, so it's the old rich are getting richer, the poor are getting poorer here. I would think that it would go up if Trump got elected. I don't know, maybe not. I think he's talked about a whole lot of different things. I think maybe the uncertainty might be shaky for a minute, but. Yeah, so I think that, the 8 ball has spoken. We got at least another good month of a bull run here, so we'll see what happens.
Well, we've seen it's not news driven. It looks like even bad news, the market goes up. I mean, they can pretty much do anything they want. But we've been in war over in Israel and stuff, and
Ukraine, and even Haiti's going to Haiti. So
and the market goes up, and so it's like.
Yeah, buy Raytheon. Well, we got the big eclipse coming, so this might be our last show for because it goes straight over the Chateau de Marcel studio, and it's like I say after the eclipse goes, everything's going to be opposite. We're going to have Republicans are going to be Democrats. Blue collar is going to be white collar. Potholes are going to fill themselves here in Indianapolis. It's going to be awesome. But I don't know. It'll probably come and go like anything, and we'll be back next Friday to talk about that. I think, hey, Gary, I think next Friday we got another couple of podcasters who think they're stock market gurus that I've invited to come on. We'll see if we can get them on here. They want to build generational wealth. That's what they're trying to do. So, and you see, now, Gary J, have you given your dad a bunch of money to invest and, just as like a thank you card or whatever, for his birthday? It's in June. Your birthday's in June, isn't it, Gary?
Then I think
we're just the opposite.
The knowledge value that I lend him.
Oh, here we go, Gary.
Every now
and then. We get the violin out.
It has the same name, right?
He invests. He invests all my money.
Get him a birthday card. Put a check for $100K in there and give it to him and say, "Hey, bud, hey, thanks for being a cool dad for all those years." So real quick before we go, let's talk about this. Is how long I know little Gary J. There, we went on a camping trip down at the Jellystone camping place. Do you remember that?
I do remember that.
So I had 4 kids. Gary's got 4 kids. They would go out exploring at night, and they went to this haunted house, and they had a ball just being out there being kids. And you just don't learn that on the internet, do you, Gary?
No.
Good memories. Yeah, I do.
Yeah, it's
that.
Fun times
Owen and your son was throwing.
Yeah. So they were trying to at the ostrich or whatever. They were throwing rocks at the ostrich. Yeah, we don't want to talk about that part. Yeah,
right.
that was or me and you riding the tandem bike without shirts on.
Oh,
that was our kids were really like running and saying, we don't even know those people, those 2 guys on the tandem bike. We don't know them. So good times.
Yeah.
All right.
Anything else you'd like to add, Gary, or is that enough for today?
I think that's enough. I've enjoyed being on the show, and thank you for having me on.
Well, thanks for taking your time and being with us today. We really
I really appreciate that the answer about the companies, how they how they evaluate their stuff. I mean, you're inside on that and how you're like watching the evaluation and actually directing the viral. I'm just out here trying to figure it out. That's why we're neophytes. So you actually don't fit in here. You're the younger guy, but you're more experienced in it. So although your old man's been doing it for a minute, it's like, I don't know if I got the nerves for this game.
He didn't say it, but I've learned a lot from my dad. So he has taught me a lot.
He's a crafty one. I've seen him make a few long putts on the golf course too that you can rely on. It's like you've been on the phone trading stock, and then I didn't 40-footer in for the win.
That sounds like my dad.
So it's Gary. I don't know if you've seen our ending of our show here. We play a little video, and it's basically an advice. You probably got some friends or that tell you that you want to get in the stock market. Well, here this little video, it sort of explains how it works. It's got a mechanical bull in and a couple gals and all that. But it's you watch this and see what you think. We end the show with this. Thanks for coming on. And hey, everybody else, catch us next week, noon live. We'll see what the market does next week after the eclipse. See if there's anything left at all. So here you go. Everybody over and out.
Thank you.
Thank you.
So you're new to the market and you're watching these market shows and talking to some of your friends, and maybe you listen to one of them and they say, hey, I got this great stock tip for you. Just get on board here and we'll ride this thing together. I'll show you how to do it, and I'll teach you a few things. And you're like, okay, come on and get on. And then you get on there, and then all of a sudden the market starts going. You invest his money, the market starts going, and it's going, and you're like, I don't know, I'm feeling a little bit shaky about this deal here, and then the market starts going up and down, and you're like, hey, and then all of a sudden the earnings come out, and it's like, oh, your friend says, oh well, sorry about that. I really thought it was a good deal. I just I'll talk to you later. And then you're sitting there holding on to the horns.